Hey everyone, good morning. It's Patricia
And Tony.
with States Realty, and joining us today is Melonny Thompson with Caliber Home Loans. Hey
Good morning.
Melanie,
Good morning. Good
Hi,
morning.
how are
morning.
you guys?
Good, how are you?
Wonderful. You look great.
Thank you, you too, you too. Melanie, we've worked together for quite a few years now, right? One of our
Yes.
trusted partners, and one thing I can definitely say is you're on top of it when it comes to communication and working all crazy hours, but getting the job done. So we really appreciate it.
Thank you. My pleasure. I love working with you as well.
Oh, thanks. And just a few things, obviously with a lot of the changes that's going on right now, we had a few basic questions in regards to, is now a good time to buy a home during the pandemic and
Yeah.
with everything that's
Can you
going
still
on?
buy?
Yes, that's a big question right now. I think a lot of people are unsure. From a lending perspective, I can kind of share what's happening and what some of the challenges that we are facing and buyers are facing. And so first off, if you are still employed, thankfully, if you are, yes, buying a home is still an option. So, what you're going to see though is there have been some slight changes. Obviously, with the surge in unemployment, literally overnight, we're seeing obviously future defaults that are possibly going to happen, right? So whenever you foresee something like that, lending right now is very risky. So we already are seeing a little bit of credit score requirements. Reserve funds may be needed now that wasn't needed before. So we are seeing some changes in the guidelines right now for people who are still trying to buy. So it might shrink your buyer pool a little bit. But for the most part, like I said, if you're employed and everything is fine, you might see a little bit of restrictions on guidelines. So that's still fine. We're still working through that. Turn times for closing. We're still, at 30 days or less. So we have the capacity, and we have, fortunately for us, our team has been able to move remotely. With the stay-at-home order, a lot of bigger banks have problems with that transition. If you're used to working in a big call center, what happened was, well, you couldn't really move your processing and underwriting to their homes. So you have a limited amount of people in operations to process all those loans that were coming in. That's why you've seen kind of longer turn times for some of the other banks. We were able to move our team overnight and not skip a beat. So that's other changes that you're seeing, and that is the reason why.
And that's good that there's no slowdown in the process, so that it seems like you guys are going still on track, between all the steps, and be able to get everything done in a timely manner, which is important.
Right.
And
Absolutely.
as for the borrower, everything can be done electronically, so they don't have to meet you at a specific office or anything like
Right.
that, correct? Yeah.
Correct. And we've been really great about that. A lot of the stuff is electronically signed. Even on closing day, most of the documents can be e-signed. We're having, the mortgage and the note has to be hand signed. And so what we've seen a lot of the title companies do is provide kind of like a drive-through service where you have everything else done before, and they pull up in their car quickly with the notary, sign those two docs, and they're in and out. So they're doing a really great job, the title companies, of being safe and getting things done very quickly and limited exposure. So
Yeah, which is benefits all, right? Okay. And then, talking about right now with the COVID-19 and unemployment and forbearance and how that affects us as realtors, you, buyers, future buyers, pretty much everybody in the industry, correct?
Yes. So this is a big topic I'm glad we're talking about because the choices that people are making now affects our industry and affects our future. When this blows over, what is our business going to look like next year? All right. So every choice is a domino effect. So we see a lot of people, unfortunately, who are really impacted, have lost their jobs, are having a hard time getting by. And then there's the people that haven't been affected, and they have their jobs, and thankfully everything is going well. Opting in for forbearances when there's not a real need is causing a lot of the problems we're seeing today. And so I don't think people realize how that affects the lender. So just to kind of give a quick, very simple kind of explanation on that is, when you decide not to make your mortgage payment, your loan servicer still has to make those payments. So if we're having to use up a bunch of cash to make these payments, that hurts our liquidity. So if we don't have enough money to continue to lend, then we're limiting the people trying to get homes now, trying to get home 6 months from now. And you're going to see a lot of these smaller mortgage companies be acquired, unfortunately. They just don't have cash to be able to hold those payments, carry those payments, and also keep their minimum required funds to be able to lend more money. So it definitely hurts that, which is why you're seeing a lot of programs going away. They're more risky, right? Because you have people also opting in for the forbearances. What does that say? That says they are more at risk for possible default 6 months from now, right? If they can't come to an agreement, they can't make those payments back. You know, if it's not due in a lump sum after, let's say, the 3 or 4 month forbearance time, there are other options, yes, than paying in full. But can they afford those other options? If you're having to make a mortgage payment that's $1,200 a month, and now it's going to jump up to $1,500 or $2,000 because you've got to make up all the payments that you missed, can you afford that? Or are you setting yourself up for future foreclosure or a loan modification, you know, which is not great on your credit and your future ability to buy? So if you want to buy a home next year, you know, the decision you make today is going to affect that. And so I really want people to understand. And if you can continue to make your payment, please do it, because you're not only hurting yourself in the future, you're hurting, you know, the lenders being able to, you know, lend next year. And which, of course, as a realtor, that's going to affect your buyer pool. So if you have next year now buyers who have credit issues, now because of the loan modification that they got into, or they, you know, or they couldn't make back the missed payments, now you have an even smaller pool of qualified buyers.
Yeah.
So it's really important for you guys to educate your customers too, and not just, hey, let's just opt in for forbearance just because we can. That's it hurts more than you think. And so that's really what I want people to be educated on. Do you want to set your customer up to fail 6 months from now and hurt their credit? If they could just make their payments now and get through it, that is the best thing that they could do. You know, this is the time that you want to use your reserve funds. You want to use your, you know, your safety net, your money that you've diligently saved. This is the time to use it, not just opt in a forbearance just to give yourself a break. It's you know, I just really want that to be known, what kind of a domino effect it can play. And the struggle for the lenders, like I said, if we're having to cover that and use up all our cash for that, then all of a sudden we're going to have less programs to offer. We're going to, the guidelines have already become a little more stringent because we're trying to prepare for the future defaults that will inevitably happen. And so it kind of all ties together.
It totally makes sense. You know, if you want to, tighten the lending requirements just a little bit, so that way, you know, future you have, have available funds for future lending and future programs, and that's very important. You know, regarding the forbearance and what happens afterwards, and all the future options of what will happen. Patricia, do you have any?
No, I mean, it definitely is a domino effect. I mean, that's what you're saying. It does affect everyone, and it's not a completely forgiven. This was a period in time, and everyone's going to understand. Everybody was in the same boat, type of thing. It's great information, Melanie. It really is. You know.
Let's bring up your website for a second, and
I don't mean to sound all doom and gloom. It's not.
No, it's the facts. You know, right now it's about hard facts as well, and a lot of things that are out there on social media that we kind of discussed before that can be very misleading.
Not telling the whole. Yeah, it's a little misleading, and so really it's our job as advisors, experts in our industry, to educate people before they make these decisions that will affect their future and, for all of us, really. So.
And do you know much on the CARE Act? I know we kind of touched on that a little bit.
Right, that people are seeing a lot. The biggest thing, I think, everybody knew, for the most part, that a forbearance is not a deferment, right? You're not going to have all those missed payments now tacked on to your term. We're not bringing the 40-year mortgage back. That's not what it is. So that was the biggest thing, is helping people understand what that means, what the forbearance is. Now, the other options available to people besides after that, say 90 days, yes, that lump sum is due, or this is when the CARE Act came out, that people were saying, oh, well, it's not true. You don't have to pay it on a lump sum. There's other options. And, oh, your lender's not telling you that. And, well, yes, there's always been another option. But do you want, like I said before, do you want that other option? The other option is a modification of some sort. Again, modifications are not great. They're not good on your credit. They definitely hurt your ability to purchase another home in the future. It is looked upon in underwriting is not favorable, and there are some waiting time frames on those. But also the other option would be, let's just say your servicer did set up a plan to not have the lump sum due, but like I said, maybe a portion of those missed payments due on top of your normal mortgage payment. So are you prepared to now pay $2,000 a month when you were paying $1,500? People can't afford that. What are they going to do? They'll end up in foreclosure. So things like that. Yes, there are other options, and that's what the CARE Act's all about. But again, look at those options and decide, can you do that? Is it going to make it worse for you?
Yeah, especially if you have future plans,
Right.
If you're thinking a year or two to move, hey, I want to get a different house, or I want to move. So
Right.
just real quick, back to deferred payment versus forbearance. Some people may not know the difference. And can you explain just that, please, with the deferred
Right, so
payment?
there's not a true deferment. A deferment really is when, let's just say you've missed $10,000 worth of payments. To defer it means to not pay it, and then you can tack that onto the end of your term, your mortgage term. That's not what's happening. So a forbearance is a temporary suspension of payments, but you still owe that money, and that money has to be paid back in a certain way. And so that's kind of the difference there.
Yeah.
And there are options for what to do after that deferment, forbearance period. And every servicer is going to be a little different on that. But the money does have to be paid back. And whether it's a lump sum, whether it's an addition, extra in addition to what you've missed, or becomes a modification where you're adjusting now your whole new loan, almost like a refinance. But it's not the same thing, and it doesn't affect your credit the same way. So again, just talk to your servicer about options, but please try to make your mortgage payment first if you can. That's all I'm trying to say. The message here is.
Yeah. If you're able to, definitely do. I think.
Yeah. Are you? I'll pull up your website again. So you can apply obviously on your website. Are you seeing more to the 20% down, that kind of?
So as far as the guideline changes, we're still seeing, we're still doing lower down payment options. The rates are still great. What we're seeing different is just a little bit more on like credit score requirement changes, minimum credit scores, extra reserve funds needed now if you have, multiple properties or investment properties. So just a little bit of guideline changes there, but still minimum down payments haven't changed. FHA is still 3.5%. I'm still doing 3% down conventionals. So that hasn't changed yet. So that's good. We're still able to help a lot of buyers.
And what about first-time home buyers? Are there still good first-time home buyer programs available, or?
There are. We have seen some go away. Some lenders are just not wanting to take on the extra risk. Right now, that's what you are seeing. A lot of programs have stopped, or are being limited because of the risk. There's already a lot of risk with so much unemployment right now. That lenders aren't wanting to add any more to it. So some of the riskier programs you're going to see kind of go away or suspended for a short time, and then hopefully bring them back.
All right. Well, thank you so much.
Thank you so much for your time. And
of course.
if any future buyers want to have any questions, I'm sure they can I'll contact you, reach out to you, and
Yeah, we're here to help, and we're like I said, our turn times are still great. We've got a wonderful team that our operational support that is amazing, and you know they're working overtime weekends to help make sure that we close everybody on time and not cause too many delays.
Right, which is fantastic. Yeah. Well, thank you for the opportunity, and yeah, again, Melonny Thompson with Caliber, and the information will be there on our links. And you have a great day, and stay safe, and take care. Thank you. Bye-bye.
All right. Have a good day.
You too. Bye.